Hello everyone, another day for us to go again. Uh, today is Sunday, 9th of July. So we're doing market breakdown, and I'll be showing you how you can use the ICT versus smart money concept or whatever you call it, and how I use that, and how I use the top-down analysis combined with the ICT and smart money concept to come out with my trading strategy, and also how I take my entries from a higher time frame, how I analyze my chart from a higher time frame, and take my entries on a smaller time frame using the smallest risk to reward uh, possible. So sometimes we get like 1:5 kind of risk to reward, and we're just risking just a small percentage of our account to make huge sum of money in forex market. So guys, if you're here once more, I want to welcome you guys to Marathon FX Academy. Here we teach, train, and mentor people how to trade. We also provide signal services. The link to all these descriptions will be on the link below. So you have a link to our Telegram group, a link to my WhatsApp group, and also a recommended broker I advise everyone to use, because for you to be in this field, to succeed in forex, first thing first, your broker is the number one thing I'll recommend for everybody to go for. So I'll leave the link to my recommended broker, which is Xness, on the link below, on the description link below. So anywhere you're watching this video, I think it should be below this video. Scroll down, you'll see links to join. And please, I do this every Sunday, and sometimes I do it midweek. So do me a favor, hit the subscribe button, hit the like. So anytime I drop huge educative videos like this, you should be the first to get to them, and you'll be opportune to get some setups, and I hope you learn a lot on this video. So so this is Sunday. We want to check on DXY to see where we expect dollar to go to. So DXY, we are now looking at the dollar index to look at how it's going to be like for the week. So I'm going to do my top-down analysis, and normally I start my top-down analysis by analyzing from a higher time frame down to a lower time frame. So yeah, here we go. So here on my screen, I have DXY, the dollar index is just telling me the price movement or the movement of the dollar itself. So most of the currency I trade, they evolve around major currencies, and they have a lot to do with the dollar. So I need to know where the dollar economy is going to in terms of their rate, in terms of the volume, whether dollar will be dropping or buying. I need to know where they're going to, because every trade I'll be taking is based on how it's moving. So looking at the XY on a 1 day time frame, I can clearly see that we are on downtrend. We've been having a clear breaks of structure, and ever since the market haven't taken out any structure, right? The market haven't taken out any structure, so the bears are still in control. And of this level, we have series of lower highs, lower highs. We have a lower high here, and another lower high here. So we still expect some drops in the dollar index so far, except we see this high being taken out on the daily time frame. So this is what I want to see on the daily time frame, and then I will judge everything based from this. So everything around this range, that's where my focus would be, right? So I go straight now to the 4 hour time frame. In the 4 hour time frame, I'm trying to look at the structure of the market, because I've seen the direction on the 1 day time frame. That means on the higher time frame, I've gathered enough data that can give me that this is on the downtrend. So what happened when price got to this level? When price got to this level, we saw a shift in market structure here. That's on the 4 hour time frame. We have a shift in market structure, and later on, price came and provided us with a new low here, and later had a break of structure. So after that shift in market structure, what we had a retracement. From these 3 candles, I can call this a retracement. So at this level, I could just take my FIB from the swing high to the swing low, and then I'll have my entries around the golden zones there. So if you like to have details on how to get your Fibonacci levels like mine, and how to get golden zones like this, just stay to the end of this video. I'll be revealing to you how you can set up your Fibonacci, and also how you can use your Fibonacci to cast nice sweet retracements in the market. So retracements in the market. So imagine we took a trade here. So you see how what I always say about our risk to reward. Risk to reward. So what am I risking here? My stop loss will be a little bit here, and my TP will be here. So here, these are the type of trade I can hold to full TP, whereby I can enter aggressively. So this is a 1:3 kind of risk to reward trade, and then you're gone. All right. So that's how I catch on sniper entries in the market. Okay, we move on to the next. So we see that sellers are in control of this market. We keep seeing break of structure, break of structure. So there's something I want to explain here, guys. Let me just show you what a valid break of structure is. This is not a break of structure. Okay, this is not a break of structure. This is not clear of liquidity. Before we call it a break of structure, we need to see a kind of closes below the last low, right? So we put it here. This is our last low. We need to see a kind of body closes below that structure. So that's why I call it a break of structure. Also here, this is another break of structure. And when you're taking trade, you need to see if the highlight cause a break of structure left behind, or called a fair value gap. So here you can take this at this level. But if you could scroll down to a smaller time frame, you have a nice entries here. And you can take that trade. And you see, for example, like our target. My target will be here. My stop loss just be below, above the other block, a little bit above, and CP here. Very nice one. CP here. So you see 1:4 kind of risk reward. Very nice, clean trade. So these are the type of trade I always take in my academy. And for the last week, we took 12 trades from Monday to Friday, and we lost just one. So if you're interested in joining our Signal group, all you just need to do is contact me directly on the links I provided on the description below, and get to me directly for that. Also, as I continue to go on, I see here we had this break of structure here, nice one, clean break of structure here, and also what are we seeing here? We're seeing some other type of zone here that price could possibly come back to, because we're still on a downtrend. Also, what do we have here? This is not a break of structure. This is what we call liquidity sweep. This is not a break of structure. So price is still haven't. So we call this is what we call now our equal lows, right? Equal lows. And what happened? We instead had half the breaking structure at this level. At this level, had the breaking structure. So now this is what we call a valid break of structure. So now we should now, instead to look for sell, we should be looking for buy, because now buyers are now coming to the market. This is a structure. We have a lower low, lower low, and lower low here now. This kind of took out the high, right? So now we have now change in market shift now. So at this level, what we should be constantly looking out for, we should be looking at fair value gaps that are around this level, and where we could possibly look out for entries in the market. So now we have a retracement. You see the three candles, right? You see the candle, just a little bit separation. So we see 1, 2, 3 candles like this in this nature. This is a retracement. So we have a retracement. Now expect market to come retrace and bounce back. So it's best for our Fibonacci levels. So what we do is this: we are looking for our swing. We are taking from the swing low, because we are looking for buying opportunity. Swing low to the swing high, right? Swing low to the swing high. Anything above here is a premium, and everything below here is discount. So at the discount level, we are looking for levels that have a fair value gap, and also playing around our that's only playing also around our golden zone. So we have two levels to look out for here. We have this one, and also we have this one. These are the two fair value gaps here. So let's say you are risking on a trade, you are risking a percentage of your account on the trade. So you come here, have your first entry here, stop loss just below. I really need to work on this line. Stop loss below this level here, and TP targeting this area here. You see percentage at that level. So boom, there you go. You can see 1:4 kind of goes to the reward. So you had your plan B here, and you had another plan B here. So you need to be open for mistakes, okay? Open for mistakes like this. Same. So we had our target. So this one was just the same target, so I think 1:3. This 1:3, 1:4. So this was the plan for the trade. And what happened? At that level, we had what? A break or structure again to the upside. So I'll take out this FIB though. Now what do I have here? Another break of structure. This is not a break of structure. This is a break of structure. What if I have a break of structure? So so what am I seeing? I'm looking for buying opportunity. So at this level now I have this high. So now what am I going to look out for? This is not a break of structure. This is what we simply call a sweep of liquidity. Right? This is not a sweep. We need to see a candle break up here. This is not a break of structure. So the market gives what equal highs there. Down here we have what equal lows. And also remember, what do we have here? A fair value gap that hasn't been mitigated yet. So what could possibly happen here? Here we need to have a confirmation. And that confirmation should be a shift in market structure. A shift in the market structure. So we need to have this before we can look forward to take any trade. Once we see this, another shift, a shift here, then we can take our trade to buy to the upside, targeting this highs. That's DXY on the 4-hour. So this is my plan of DXY on the 4-hour. Because a lot of others are sleeping here and a lot of liquidity is sleeping here. So we need to see a shift here, we can hold. Right, so that's just it on DXY, where you can expect if you see this happen, boom, you can take your trade and hold confidently to TP. Hold confidently to the TP. At this level, once you get your confirmation, no confirmation, no entry. So now I know what I'm expecting on DXY. So I always like to end my DXY on a higher time frame because the higher time frame zones are always the strongest in the market. So I know I'm looking for buys for dollar to buy. So dollar quote pair should be selling while the base are buying. So now I have this my data on DXY. I'll just go to my trading plan and I'll jot it down, and I know my expectation, what I need to expect from dollar into XY the whole of next week. And then I'll know that buyers are taking over the market. So we'll be expecting that buyers in this market tomorrow. So this is what we're calling out here. A shift. Market structure. Internal one, because the general structure is in an uptrend, it's in a downtrend. But at this level we have seen some sort of shift in market structure at this level. But this is just coming to clear down all the liquidity that was sleeping here to take it to the upside. So let's look at the Great British Pound USD. Great British Pound USD. After Great British Pound USD, we check on Euro USD, we check on gold, and then I end it up with a USD CHF, and then I'll show you how to get your Fibonacci levels like mine. So please, if you're here again, please, if you've watched up to this level, please leave a like, subscribe, and also please don't forget to drop your comments. And drop your questions that you need. Any question you ask on the next video, I'll try to explain. The last video, I had people asking me how they want to know how I set up my Fibonacci levels. So I'm going to do that today. So if you have any questions, just drop down in the comment section. I always read and I love the feedbacks you guys have been giving me so far. And I always read your comments. And please don't stop dropping them, because these are the things that keep me going. So with that being said, let's go to Great British Pound USD on the 1-day time frame. So what are we seeing here? Unlike the DXY, it's on the downtrend pushing to the upside. Right now, how DXY on the 1-day time frame pushing to the upside too. So DXY is on the downtrend on the higher time frame. Why DXY is on the downtrend on the higher time frame? Why Great British Pound USD is on the uptrend? So this guy are inversely correlated. So what can we see here? Just like what I told you guys already, this is what we call a break of structure. Another break of structure. So you see the three red candles, 3, 1, 2, 3, forming all the same. So this is what we call a retracement. A retracement at this level. You've seen this on the 1-day time frame. You've seen that this is our lowest point. This is our lowest point, and this is our highest point. So you see 70 and around our golden zone. So at this level, you have cut this move and make serious money from here straight up. So just stay at the end of this video. I'll show you how to use Fibonacci level. We have another break of structure here. Right, another break of structure. Continuation break of structure. So break of structure to the downside. What is it going to do here is that there could possibly be a demand zone here that could be tripping these guys, and it's that weak that caused it to be around that Fibonacci level. So we are taking it out, continue. How do you have here another break of structure? Retracement to the candles, retracement from here bounces and goes up. So what you can see, take that from here, our lowest point to our highest point. See, playing around our golden zone. So here could be a good level for you to catch your entries, because what do you have here? Tiny small fair value gap that you can take your entries from. Or you can just hold this bearish candle to be your order block, or whatever you can call it, and stop us below here to be safe, and you have a clean one up there. So this is how we do it in the Marathon Academy. And at this level, so what do we have here? How do we have relative equal highs? So there's nothing important here. There's nothing that's happened here. So there's no break of structure. So price is playing here. So this is on the 1 day time frame, right? It's on the 1 day time frame, and now this is our low. Price is playing around our low and our high, right? Our low and our high. So everything we are looking for is within this zone here. So I'll go down straight to the 4-hour time frame. So this Sunday market breakdown. So this is 4 hours. What am I saying on the 4-hour? Price got here. What happened? We had a break in structure, a shift in market structure. So you can call it a change in character. We call it shift in market structure. And you see price coming back up here. Price came did what here. So what happened? So there's a zone here that price will possibly turn out from. So at that level, is that look at the last bullish candle that was sleeping there. You can capture order zone to be your order block. And after this, you see price came here, created some liquidity. And what happened? It came back right up to. So if you can scroll down to a smaller time frame, you have your entries here around 50 million. You have a nice entries here where you can have possibly around this level. So that could go to the smaller time. That's why I would like taking our entries on the smaller time frame where we have entries. So I can just let me just replay and let's see how it played out on the smaller time frame. So I have my replay button here. So let me just take it out from here. Okay. Maybe I go to 15 minutes. While looking at this zone here, that price. Good. So you see how this fair value gap here. This one here. This will not consider this to be mitigated because it never did break any structure. Right? This is the low, so it never did break any structure. So we need to say now here is what we call our change in character. Right? This is what happened on a smaller time frame. Now we're expecting the market come back to this level. So this will not this is just a trap to blind us from that level. Right? So if you would have taken on this level, you'll still be in profit at this level. Price tapping. It has not yet broken any structure. So this is not even the right thing to follow up to that level. So this is what we just say. Our break of structure should be somewhere. Also, candle close, but yeah, break of structure now. So expect the market to do what, to retrace back to that zone. Retrace back to that zone. So ever since the market retrace back to that zone until, so let's have something like this around here. And see when the market retraces around that zone. So now after doing this on the 15-minute, what do? I go high to the higher time frame, let's say 1 hour. Are you seeing the kind of issue what I'm having there? 10 pips, not up to 15 pips, but let's leave it at that level. And where is my target? So I'm still targeting level. And then let's use the horizontally. So at this level now. So what do you have here? 1 is 12 kind of weeks to reward. So TP levels here, here, and finally here. So when this low is taken out, I can now break it. So let's go. See how that tapped up in beautiful TP1 hit, TP1 hit, TP1. So now at this level, I've broken even. And at this level, I'm around. At this level, we are up how many pips? 90 pips at that level. Let's keep going. Let's keep going to see. Here with our TP2. TP2 smashed. Very clean and nice. Okay, still around. What do you have there? A break. So at this level, you're still around. TP2, boom, you're gone. That's just it. That's just how you do it, guys. That's just how you do it. That is just how you do it. That's just how you do it. So see where, so how our TP3 smashed and price is now getting along that level where that was out, that was in. So that was a clean one. So you see that's a clean one at this level. 171 pips. Stop loss 13 pips. Stop playing. 1 is to 12 kind of gives you reward. So that's how you catch nice moves in the market. So let's take this out and look at our next move. So at this level, what happened at this level? What happened at this level? We had a shift in market structure. Let's go back to our 4-hour time frame here. Okay, so what happened here? We're on the downtrend, and what happened? We have a shift in the market structure. This is not a break. This is not a break, but on a smaller time frame, there's a break. So we had this level, so let's stay on this level and move now to the 2-hour because now we've seen what we are looking out for here. Let's go to the 2-hour time frame. All right, and knowing fully well that there was a fair value gap here. All right, so there's something like orders slipping above here, and that zone wasn't mitigated before. So when price got to that level, what happened? We saw a shift, and if I can remember clearly, this was some fundamentals that came out on Thursday. It's a shift, right? So this everything here is just a fake out because no structure is broken here. Remember, I tell you that we need to see what a full body close, right? So we need to see a full body close. So when price got here, how this shift, and so we should be looking for what a change character level, another shift now. So at this level, we have what a clean shift here, right? A clean one around that level. Price get up, woke up that level and took out that high. So at this level, we're just looking to see something confirmation. At this level, knowing that we have seen this fully very well and nothing happened here, and price have come to do what again here, giving us another break and structure to the higher side now. So everything below here now will be our buying areas. Everything below here will be areas for us to buy. So I can go to 1 hour time frame. 1 hour time frame. And what am I seeing here? I need to look out for. I can just use my FIB to mark out a low to a high, back at our golden zone. So everything below here for us to buy. And that didn't came to us, so no problem. We missed the entries here. So what do we have here now? We had another break in structure here. So guys, don't ever get mad at yourself when you miss an entry. There's no problem. You had an entry here. So what they're looking for, want to see if there's some signs of retracement to where we can expect the market coming down to any zone here. So we can just say up on our low to our high. Anything around our anything coming to our, it should be our demand zone, golden zone. So from here we'll mark our golden zone from 70 down here. So we just take everything our golden zone here. So this is our golden zone here. Expect price to come back at this level. Then we can have our pending orders at that level. So if we have that, we have a pending order here. Stop loss just below last level, 16 pips. We're targeting which area here? We're targeting maybe at this level. Maybe let's see if we can have it up a little bit. Yeah, stop loss below here. You have your entry here, and you're targeting this level. It's still the same. See how it plays out very well. 1:5 kind of risk to reward. I take that out. So I'm just giving you how you can trade such levels. So we have what we have here again. We have another break here. So at this level itself, this even would have been a very nice demand because notice a break here, and everything below here is what? Liquidity. Everything here is just liquidity. So you can look for a doji candle here, or you look at the last bearish candle that caused the break, that got the push up. So if you can come down again a little bit, so this bearish doji candle here, indecision candle, yeah, a nice level to have your entries at that level. You can catch the spike and shoot the upside. And what happened? We have here what? Another break of structure. And you remember this area up here is what called, this was what we term as our relative equal high. So at this level, we are looking for a shift here on a similar time frame. So now the market closed here due to the NFP that came out on Friday. We pushed the market to continue. We had a small range here, and the fundamentals came out positive, negative. So instead, we had dollar selling while G was seriously buying. So it break out from here, came back, pushed to the upside. So this was a result of the NFP. So we expect to have more drops down here because we know this was a result of NFP, and it came and stopped at this equal highs that we had on the higher time frame and the 4 hour time frame. So now we should be looking for entries whereby we should look around to see if there's a zone here. Remember, we had this level here that was not tapped before. This level here that was not tapped before. So expect, since the market is in an uptrend, expect to see the market come right down here now. Turn direction from here. So from here we're looking for another confirmation. Remember, no confirmation or entries, right? And our confirmation should be a shift. So now this is on a 1 hour time frame, and we're looking. So we expect to see the market come down here, but we don't want to waste this whole move because this whole move from here is about 100 pips. See, we're getting to 193 pips. So you can catch that. That's a lot of move. So now we are on a one higher time frame, that's a 1 hour. So I scale down to 30 minutes. So what am I looking for here? I'm looking for a shift on a smaller time frame because I know this is a resistance zone, and also this is called equal highs, and equal highs also double tops. I mean that's a pattern for bearish momentum coming into the market. So what am I seeing here? I'm seeing what I always like to see, a retracement. We have 3 bearish candles giving out, closing just after each is opening. So this is something you should learn on this video today. So I go to 15 minutes to see clearer. You see how the momentum coming down. And what do we have here? We have a shift in market structure. Now you're seeing the candle closing below. So now we should be looking for a selling opportunities around here. So I go to the 5 minute. I keep scaling down to have my clean entries. So in the 5 minute, what am I seeing? Oh wow, I have this nice bearish order block here. And also, this is a golden zone here. This is a golden zone. If I can take the bouncing high to the swing level, you see that this is our golden zone clean here. So since it's not that much, I can use my entries here, waiting. Have my entries here waiting. But since this is on a Sunday, sometimes the market always open with a big spike to the upside or well for market cap. So I won't have any pending entries. So I'll just like to catch such moves during London Open. So I want to see how the Asian region will play, and I have my good nice entries here. This risking just 10 pips because of spread and other stuff. 8 pips, maybe much, 8 pips. Because if this fall around the London station, I expect the pips to die. And where's my target? I go back now to the 1 hour time frame and expect a drop down here. What's my target? Almost 200 pips on that one. If that should happen, we reach forever. So you see how I'm taking entries on a smaller time frame and capturing big moves. That's how we cash it in for a marathon FX. This is just how we do it because I know there was a free zone here that was being skipping. So now this is some sort of liquidity that's skipping here now. Others are skipping here. So I might expect the market to come here. So I should be expecting to sell down here or buy right down here. Or buy from down here. So guys, this is my plan when it comes to British Pound USD. I go now to the next currency, which is the Euro USD, and I'm taking it from the higher time frame in 1 day time frame. 1 day time frame. Look at my drawings. Expand everything so we can have full control of the chart. Just like GU, this guy is on an uptrend. What do I have here? I will break a structure. What do I have here? I have another block. Demand zone. That was respected. Just tap mitigated on it. So I have some extra liquidity sleeping here on a higher time frame where this guy could possibly come to take it out. In the long future, I have a buy side liquidity sleeping there. So now I have this level here, and I have the market playing around this level here. So I go to the 4 hour time frame. Time frame. What am I seeing here? 4 hour. Price got to this level. Shift market structure here. Shift the market structure here. So what are we looking out for? Shift the market structure. So at this level, we have now what a break of structure. So when you got to this level, how this shift market structure, what am I seeing here? I'm seeing a nice fair value gap sleeping here where I see price might possibly come up to dropping. So having this data on a 1 day time frame, so this will corner relatively equal lows at this level because no level has been broken at this level. But I've seen a shift in market structure here, call it change in character, and now have our breakout structures here. So now call this one equal lows. So can this cause some sort of liquidity sleeping here? So what is it hiding from here? We'll find it out later. So I go to 2 hour time frame. 2 hour time frame. What am I seeing on the 2 hour time frame? I have this gap here. Market haven't come up here. So I expect to have a sell here. So at this level, what am I seeing here? I have a bullish order block sleeping above here again. So the more I keep going down on the smaller time frame, the more I keep refining my zone and having perfect entries where I can have a nice sweet risk reward. And you see everything here. This is what called trendline liquidity. Trendline liquidity whereby you have orders or stop loss are sleeping here. Stop loss, you have this tap here drop, and then after that level was taken out, I think this was due to this NFP data that came out negative that caused EURUSD to buy to the upside, and now what can possibly see that it's coming at this level. So at this level, what do we have here? Relative equal highs, because this level hasn't been taken out. Level has been taken out, so the market is playing at that level, but there is something sleeping here on the higher time frame. So I go to the 1 hour. to see, but so so this is what this will have the equal highs at this level, and also we have this level here. Like the market broke out from this range, so this was like some sort of range on a smaller time frame, some sort of range, because we had equal highs here, and after the market broke out from that equal high, so we could possibly have the market coming down to turn from here, and we need to see a shift on a smaller time frame. So we're not expecting to look on a higher time frame, but we need to go to smaller time frame, because we expect to see a shift from that level before we say we want to start looking for buying opportunity at that level. So we have it more clearer here. So now the market closed with some sort of range in here. We need to see this level taken out. We'll go to 10 minutes. So I keep refining my zone to see what happens. So at this level, nothing has been. I want to see a level taken out here. So I can go to 3 minutes to see if make it clearer for you. No level has been taken out here. The price just tap on that level, bounce back up. So we need to see a level taken out here. If that don't happen, we expect price to push to the upside. So we see price coming down here. So we need to see what will happen at this level. So this place is still in control. We need to see this whole level taken out first before we can see. We are not looking for selling to sell to the downside. But with that being said, we have price now playing along this level in a smaller time frame. So either you're waiting for price to take out this level, this high, waiting for price to take out this high, or take out this low, where you can decide your direction in the market. So nothing to be said much about Euro USD. Let's just stick with the one to get in time frame. But GU is really clear, so we already see where we're looking for GU. Alright. So I'll check on gold. Let me check on gold now. Check on gold. After gold, we're checking on USD CHF, and then I'll show you now the Fibonacci levels that I have on. If you want to use my FIB. So this is gold, guys. This is gold. 1 day time frame. 1 day time frame, very clean, like I told you guys. This is how we break. So this guy is pushing to the upside. And what do we have here? Nice fair value gap where it will come down to. Alright, so where are we playing? We are playing along these areas here. Yeah. And here. So 4 hours. Oh, my battery's about to go out, so I need to be fast on this one. So I'll just end here and save this video, guys. I'll end very soon and save this video. My charger is a bit far, so I'll end with gold, and then we'll stop. So wherever it stops, just know that we're ending there. And please don't forget to like, share, and subscribe. So this is 4 hour. This is 4 hour, and I go to 2 hour time frame. I left my charger right downstairs, so somewhere where I don't want noise with you guys. So this is gold 2 hour time frame, and excuse me, guys, 2 hour time frame. And what are we seeing here? We have a break, shift market structure, because we're from going up now coming down, shift market structure. And what happened? Price came tap on this level, start shifting to the upside. And what do we have here? Equal highs, no level has been taken out. So we expect gold to come down. So on a small time, 30 minutes, we're expecting price to come at this level because we had a range here. NFP came out and just going to the upside. So we expect to see gold selling. So let's go to 10 minutes. I'm rushing this up so I can save this already. So I expect price to come here. So I expect gold to come here and start selling. So this, let me go to my Fibonacci level and show you the settings before this goes off. I promised you guys this already. So when I come to Fibonacci level, just come straight to settings. come straight to settings. You can configure the figures like mine, so you can pause this video. And this, we've come to the end of the video, guys. Sorry I couldn't do USDCHF, but I'll do the analysis and drop it on my YouTube and drop it on the Telegram channel. So the link of everything will be below, so you can see the analysis for Great British Pound USD, Euro USD, Gold, and USDCHF. And this is the Fibonacci retracement level. So all you need to do is come to settings and go to your settings, and you change your figures to mine, and your colors, you want to have your colors like mine, and just that's just all you need. All you need is 1, 2, 3, all of the 0 0.5, 0 0.705, 0 0.88. So those are my levels I want to see. And it's on the other side I have 0 0.5, 0 0.76, and 3.361. You click OK, you have it just like mine. So guys, we've come to the end. Have a profitable weeks on gold. I'll be looking to sell from here, bringing it down here. So goodbye, guys. Don't forget to like, subscribe, and drop some comment. See you on the next one. Bye.